This is not investment advice. This is for entertainment purposes only. Do your own investment research before investing. So let's be real. Your 2022 stock portfolio probably isn't looking so hot, and you're not alone. In 2022, many investors were sold the vision of continued growth and that you can get rich quick in the stock market. And while a few investors did get lucky, most retail investors got crushed. So let's talk about a stock that may help you get your portfolio back in shape. This is a stock whose management is disciplined, methodical, and dedicated to their investors. The stock I'm referring to is American Electric Power, stock symbol AEP. Let's talk about AEP and how it may help you shore up your hurting portfolio as we start 2023. As of the start of the new year, AEP has an estimated intrinsic value of $108.73. Right now, that would mean AEP could be significantly undervalued. Our full calculation of AEP's intrinsic value is linked in the description below. On top of that, AEP has proven over the last decade to be reliably increasing earnings, sales, and dividends. This reliable business growth has been paired with reliable guidance, and this guidance has helped minimize AEP's volatility. It's why AEP has been rated as our top electric company and top safest utility stock for income investors. Link to those lists also in the description below. The new CEO, Julie Sloat, starts January 2023. Nick Atkins, chair of AEP and previous CEO, noted in their last earnings call that AEP continues to exceed earnings projections and raise guidance. On Julie's watch, this culture around performance is likely to continue into the foreseeable future. Julie made it clear on the last earnings call that she was committed to reliable and clearly explained earnings guidance and, of course, meeting those commitments. And all of this is possible thanks to the company's strategy of being a pure play regulated utility. By being a pure play in electric generation, transmission, and distribution, AEP is able to reduce business volatility by avoiding the more volatile natural gas distribution business. AEP is also reducing exposure to the energy sector by investing extensively into renewable energy. Regulated renewables are forecasted to make 22% of AEP's capital expenditure through 2027. And while it's great that these capital projects will reduce carbon emissions and help the planet, there is another, more business-related reason why renewables are so important to AEP. You have probably noticed that gas prices have been quite volatile lately. Well, AEP is affected by this price volatility too, and they're sick of it. Their push towards renewables will reduce AEP's exposure to the volatile energy sector, which will give them more consistent earnings. If you're confused on what the differences are between the energy sector and the utility sector, check out our video explaining the differences, link in the description below. Then there is AEP's focus on being a regulated utility. Now I need to oversimplify what this means or this video will become way too long, but a regulated utility basically has a monopoly over the electrical grid in a region. To have this monopoly, their rate of return is regulated by a government entity. So basically this gives AEP a big moat. AEP has less competition, which provides even more sales stability. And all this stability and consistency doesn't just make its investors happy, it makes its creditors happy as well. AEP's credit scores are considered investment grade, allowing AEP to have access to credit that can fund its capital projects. And on top of all this, investor equity continues to grow. AEP's investor equity increased $2 billion year over year from 2021 to 2022. This was thanks to reinvestments into capital expenditures like solar and wind farms. This efficient use of capital has helped to grow AEP's assets. AEP's price to book is roughly 2 now. With book value and earnings per share increasing, AEP is looking to be a strong stock to consider for your 2023 portfolio. So, are you tired of hearing about supposedly great investment ideas just to be let down as they crumbled in 2022? StockGossip.com is changing the way financial media works so that retail investors can win. Traditional media companies will trend investment ideas that are meant to maximize your dopamine hit. They excite you, ignite a fear of missing out, or completely miss great investment ideas. StockGossip.com trends stock analysis completely different. We trend by performance, and our content creators compete to give you not just the most informative stock analysis, but stock ideas that are actually healthy for a long-term portfolio. Try StockGossip.com today and draft our top gurus. If you have a great stock idea, Share your articles and YouTube videos on stockbossup.com today to get your ideas to an even larger audience. The better your stock ideas perform, the larger your audience will be. And thank you for helping us grow wealth at scale.